Because I saw something that kind of hit me this morning, and that is that the Trump put and the Fed put are both showing signs of fatigue, and this could be a heavy period that we're moving into in terms of stock prices. I mean, you can only do so much to keep things hitting new highs.
Right.
Who can we count on now?
Well, the market needed a positive catalyst to continue this bull run to keep going. And when we were coming into trade, I think everything was priced in that we were going to get a deal. Everything in the market was looking positive. U.S. economic data was looking positive. China data was actually looking positive. We needed something external. Earnings helped us a little bit, but I think what the market wanted, and I look at Fed funds futures as kind of a wish list for the market, they wanted an indication that we were going to see a cut or that we were going to see even more dovishness from the Fed, and they didn't really get that through 2019.
Yeah, I don't think we can look for help at either one of those things, at least right now. The China thing could come back quickly, couldn't it, Anastasia?
It could. Look, it really did come back last week, and I will have to acknowledge that the market is not prepared for the deal to fall apart here. Because if you ask most people, they would tell you that there's 80% odds that the deal is going to get done mid-May, and that is not the case. So that's what worries me a little bit near term. And also, if you look at valuation of assets, we were slightly overvalued relative to where the economic data is. But then on the other hand, I look at positioning, and it's certainly not where it was stretched back to 2008, late 2018 levels, I should say. So for that reason, I think the downside could be shallower and certainly not 20%, but maybe in the 10% range. But the other thing I would say is you have to look a little bit beyond the next 3 months, and you have to say, what is it in the best interest of the U.S., what is in the best interest of China, and it is getting a deal done. You know, I mentioned to you, Joe, that we were in China last week meeting with clients and at various conferences, and the takeaway from that is China is a rational actor, one that wants to get a trade deal done because it realizes the dependency on the U.S. technology is very much real. So while longer term, they probably do want to walk away from that and reduce their dependency, short term, they just cannot afford it. So that's why they want that good and stable relationship with the U.S.
But I mean, I feel like it's the logical solution that there would be a trade deal for both sides, that it's the rational solution.
Right.
But I also feel like politics come into play, and politics are anything but rational a lot of times. And if you have both sides thinking, okay, we've got to make sure that we appeal to our home base, I'm starting to wonder if
right. I do agree that obviously, you know, being tough on China has played pretty well politically, but at the same time, doing something for farmers, I think is going to play even better politically.
It hasn't hurt yet. People seem to get behind it. But, you know, even just watching the markets now, we're starting to wonder, you know, how much pain will President Trump also be able to take in terms of 2020 coming up, and
right.
He likes stock markets that go higher. He wants GDP numbers, he wants jobs numbers, he wants all these things.
I think he is willing to afford a little bit of downside in the markets. Maybe it means 5%, maybe it needs 10%. But if you look at the performance of the markets, the agriculture component this year is the one that's down while everything else is up. So how does that play with the soybean farmers in Iowa and Wisconsin? Probably not really well.
Who can take the pain for longer, China or Trump?
He can take the pain for longer?
Who can take the pain? That's the leverage question.
Right.
Yeah, I mean, I think China definitely can.
Right.
China definitely can. But if you look at, you know, President Trump approval ratings, they tend to track markets pretty closely. So that's why I say the near-term downside is likely not that great, because he will, to your point, Joe, have to turn the ship around as we head further and further into the election season.
Well, meanwhile, I mean, the jobs numbers, and that's going to, I don't know whether it's going to continue forever because we're running out of workers, but the base economy right now is you would give it what, a B plus, A minus? I mean,
I give it an A minus. And the interesting thing to look at too is that the unemployment numbers and the relationship between unemployment and overall CPI or PCE seems to be broken. But the relationship between unemployment and wage growth is not broken. And that's what I think people are missing in this. And some of the expectation that we might see a cut by the end of the year is ignoring the fact that wage growth continues to be pretty healthy. Now, I would rather
we will see some inflation that creeps in.
We might. I mean, it would have to bake through. Obviously, wage growth is not a part of PCE, but we would have to see it bake through. Now, if you have a force where it's more money chasing the same amount of goods or more money chasing fewer goods, that's probably healthy inflation. If it's a force where we have tariffs coming in and creating inflation, that would be a little bit more unhealthy. And I don't want to have to see the Fed make a move because of tariffs. I'd like to see them make a move because we have wage growth, because we have healthy demand in the economy, and that would bring them back to the table.
I didn't think about that. The tariffs just directly impacting inflation and then forcing the Fed's hand to potentially raise rates when the president wants to see them cut rates.
Right, and we already saw some of that come through in first quarter guidance when you had companies come out and say, our revenue line is about steady or maybe even slowly growing, but we had to pass through some of our pricing increases to consumers. So
all right,
that could continue.
Liz, thank you. Anastasia, thank you.